Okay, we're going to talk about petty cash. So what's petty cash? A lot of times companies, they have things like, plumbing company as an example. Somebody comes into the office and says, I need to buy gas for the truck. So the office manager will give them $50 and say, bring me back a receipt and change. They go out, they spend $40 at the gas station, they come back with $10 and change and a receipt, right? And that $10 goes back into the petty cash account. So it's kind of like a cash drawer that you have at your office for needs, for things that we're not going to write checks for or pay bills for. Okay, very common. Petty cash is very common. So I've seen people handle petty cash multiple ways. I'm going to show you the first way, which is a way I don't really like. So don't follow that way. And then I'm going to show you a second way, which is a little bit more difficult, but much more accurate from the accounting standpoint. So the first way I've seen people enter petty cash is they go in and they write a check, right? So they say, I have taken out cash, I'll put it to cash, on 12/15, and they create a vendor called petty cash. Now, a lot of times I've actually seen people put this in as an other name. This is one of the few times when I think other names are okay. I prefer vendor though. Even though it's not really a vendor, I just prefer vendor over other name because of reporting purposes. Okay, so petty cash, we're taking out $500. So they went to the bank, they took out $500, but they don't know what they're going to spend that on yet, right? So sometimes I see them just put it to an account called suspense, right? And suspense is a other expense account, and it sits in there. Oops. It sits in this suspense account until I can figure out what I spent that $500 on. Okay. So as I spend that $500, what they'll do is they'll come in here and they'll say, okay, now I only have $450 here, and I spent $50 on gas, right? And then a couple weeks later, they come in, they say, now I only have $400, and I spent that other $50 on, a contribution to a local charity. So what's the problem with doing it this way? It's the accounting, right? Because what this is saying is it's saying on 4/15, what this is telling your books, on 4/15, you spent $50 in oil, you spent $50 in contributions. And most likely when it comes to petty cash, you're not doling out that $500 in one day, right? It's over a month or a couple weeks at least. So this way, in my opinion, is not accurate when it comes to accounting. And you're going back and having to edit a transaction constantly. Okay. I've also seen people come in and instead of figuring out where that $500 went, they just stick it to miscellaneous, right? Why do we not want to do it that way? That's because you want to make sure, both as the business owner and as the accounting person, maybe potentially running a business for other people, that there are no questions having to do with this $500, right? So if you take out $500 and you stick it to miscellaneous, somebody could say, well, what is that? What did you spend that money on? And then you have to go back and do research, and maybe you have an Excel spreadsheet or anything like that, but it still raises a flag. We still have to go do some investigation to figure out what we did with that $500. It just would be a lot easier, a lot fewer questions. The owner will feel comfortable, the accounting people, office manager, whoever will feel comfortable if we do it the way that I'm about to show you. Okay, so how do we set up petty cash? So the first thing you do is come into your chart of accounts, and you're going to create a new account, and it's going to be a bank account. Now, I know it's not really a bank, but bank accounts, if you think about it, are accounts that hold our cash, right? That's what they are. So we're going to treat this as a bank account because it is a drawer or a container, whatever it is, that's holding cash. So I'm going to put in here a number. I'm going to call it petty cash. And if you have multiple petty cash accounts, I think it's okay to set up multiple petty cash accounts on your chart of accounts. I would recommend watching our video about how to organize your chart of accounts so that you don't, it doesn't look funny. But it is okay to have multiple petty cash accounts. Like let's say you have one for your Austin office, and then in your Houston office, you also have a petty cash account there too. I think that that's okay. For now, I'm just going to say petty cash. So it says, do we want to set it up to connect to a bank? No, because there is no bank account, right? There's not a bank account here. So the first thing that we're going to do is we're going to make a deposit into our petty cash account. So how do we do that? We take money from our bank account and transfer it over to petty cash. So I can go to banking and write checks. And I say I'm going to write a check from the company checking account, still put it to vendor petty cash for $500. But this time I'm going to put it to the petty cash account, right? So that's going to take out of my company checking account and put it into my petty cash account. Right, so now I have $500 in there. A couple other ways just to hit on quickly. I can transfer funds, right? Check out the video on transferring funds. I can also, when I go in to make my deposits, right, so let's say I'm depositing these checks. Down below here, I can say I'm depositing, $45,300, but I want cash back. Oh, I can't deposit to and take cash out of. So I'm depositing it to the checking account, but I also want to take cash back to the petty cash account of $500, right? So here it says deposit subtotal is this. I'm taking $500 out. That means that the total deposit is going to be $44,800. Now, of course, if you print deposits out of QuickBooks, QuickBooks prints this out for you automatically. You don't have to fill in anything on the deposit slip. So let us know if you need deposit slips to print out of QuickBooks. We've got some great deals on that. Okay, so $44,800, right, is the deposit total. I say save and close. Now, because I did both of those, I actually have $1,000 in my petty cash account, right? Okay, so what happens as I use petty cash? So I like just doing this in the register, but because it's a cash transaction, you're actually, as far as QuickBooks is concerned, writing a check. Okay, so you can write a check out of petty cash if you want. The benefit of doing it this way is, of course, we have that little attach feature. So Joey comes back with his receipt, right? His $40 spent on gas. You can scan that receipt in, attach it right to this document, so you have it to reference in the future. Especially some of those little 40-column receipts, right? Those little skinny receipt papers that you get from, the gas station, etc. Those get worn out quickly. So scanning them in helps you to have proof of that purchase, and the ink won't rub off in the scan. Okay, so come in here, petty cash. We obviously don't have numbers, right? Because there's no reference number in there. Who did you pay? So I'm going to say I paid, All-Star Truck. How much did you pay? $40. And then I say, what was it for? Gas and oil. Again, I can put classes in. I can put what customer is associated with if it was for a particular job. And I say save and close. So that goes ahead and it removes $40 out of my petty cash account. And then it shows that I have an expense of $40. So I'm going to go ahead and do it. You can also do it straight in the register here. The problem with doing it in the register, again, is that if you want to attach documents, you end up having to open it up. But I'll show you what this looks like. So let's say we got 3 or 4 receipts for today. And today is 12/20, or maybe even January 1st, 2021, right? So that's where I was talking about before. When we have it as just one transaction and we edit it, it posts all those expenses on the date of that one transaction. Doing it this way allows us to post the expenses on the date we actually have those expenses. So a couple weeks later, we have another one to our All-Star, and it was for $55.80, right? And then we come in a little bit later, and I hit return. Come in a little bit later, and we have another expense to, Big Value Warehouse for $85. Usually it's not a flat amount, right? For some job-related costs, record. Okay, so I can keep track of, as this is happening, right, my account's going down here. Okay, so then what's nice about it being in a bank account like this also is that we can reconcile it at the end of the month, just like we do any other account. So let's say it is the end of December, right? And obviously these were we'll say end of January for now. This blue line, just as an additive in there, this blue line is showing up in there because the system right now, since it's a sample file, thinks it's 12/15/2020. So that blue line shows anything that's dated in the future, right? So just ignore it for now. But if you see that in your own file, that's what that means. You have transactions dated in the future. Okay, so I'm going to go in and reconcile this account. So normally when we reconcile a bank, right, we get a statement from the bank. So what I like to do with this, especially if you're an enterprise, is I like to have someone count out the petty cash, account, and give the total to accounting to reconcile. So they count out the petty cash account and they say, they give it to accounting. They say there is $815 in there and 20 cents. Okay. So I go into reconcile petty cash. I say I'm reconciling it as of January 31st for now. And I have $815 and $8.15 and 20 cents. Okay. Now, when I go in to reconcile this, I say, okay, yeah, we had the two deposits. I do see that we have these withdrawals, right? So I posted these transactions. I see the receipts for them, whatever it is. But we have this variance of $4 in there. Now, $4 is pretty immaterial, right? So who really, it could have been a mistake. Maybe the receipt was for $8.59 or something like that. Could be a pretty simple thing. So there are two ways that we can handle it if it's immaterial. One way is we can create a journal entry to write it off, or we can go into modification here. Say we have a service charge for, I don't know, office supplies or something, some kind of generic account. Again, I know it's kind of miscellaneous, but yeah, miscellaneous, something like that. So I can come in here and put it in there. Now notice that when I put in the service fee, it says, okay, you're just writing that amount off. Okay. Now if the variance was something that was material, so let's say they said we have $400 and $415.20. That's a $400 difference. So that is the opportunity for us to say, where did that money go? Right? This is our way, again, to have checks and balances. Somebody else counted the money. Somebody else is reconciling it. Then we have to go back to whoever's in charge of this money and say, we're missing $400. Usually they say, oh, gosh, that's right. We had a $400 payment to, Big Valley Hardware Store, whatever it was. Or we bought, company lunch, whatever it is. And we know what it's about. But this is, again, another way for us to check on ourselves, right? Post in the correct period and make sure that we're maintaining that petty cash appropriately. Okay. All right. So one other thing I just wanted to throw in there that I've seen people do before is when owners are paying out of their own account, right? They're paying out of their pocket. They went into their own cash and they got money out. And when that happens, what we've done is we have that petty cash account in here still. We let it run negative, right? The owner turned in a receipt for $50 for gas. We haven't given him $50 yet, but he gave us this receipt. He paid for gas for the company, and so we put it in there. And we put the expense in. The cash runs negative. Then the bank account is negative, negative, negative. Then when at the end of the month, again, or end of period, what we do is we cut a check to the owner to reimburse them for all the payments that they've made on the company's behalf. So I've seen petty cash run that way as well. Okay, that's petty cash.